How to set financial goals. Setting financial goals is an important part of achieving long-term financial success. Whether you're looking to save for retirement, buy a house, or just have some extra spending money, having clear goals in place can help you focus your efforts and stay on track. In this blog post, we will explore the steps necessary to create financial goals and provide actionable advice on how to reach those goals. From understanding the importance of goal setting to creating smart, specific, measurable, achievable, relevant, and time-bound goals, and more, read on to learn how to set financial goals that can help you achieve your dreams. Why you should set financial goals. When it comes to financial success, setting goals is key. By setting financial goals, you can better focus your efforts on achieving specific targets. This can help to make the process of becoming financially successful more efficient and effective. Some of the benefits of setting financial goals include: 1. Having a clear sense of direction. When you set financial goals, you have a better understanding of what you need to do in order to achieve them. This can help to keep you focused and motivated as you work towards your targets. 2. Measuring progress. Setting financial goals gives you something to measure your progress against. This can help you to stay on track and make sure that you are making the progress you need to achieve your targets. 3. Keeping yourself accountable. Once you have set financial goals, it is important to hold yourself accountable for achieving them. This means taking action and working towards your goals on a regular basis. 4. Achieving greater satisfaction. When you reach your financial goals, it can give you a great sense of satisfaction and accomplishment. This can be a great motivator to continue working hard and achieving even more in the future. How to set financial goals. When it comes to setting financial goals, there are a few things you need to keep in mind. First, you need to be realistic about what you can achieve. Second, your goals should be specific and measurable. Third, your goals should be given a time frame. Lastly, your goals should be achievable and actionable. Now that you know the basics of setting financial goals, let's get into the nitty-gritty of how to actually set them. The first step is to figure out what your overall financial goal is. This could be anything from saving for retirement to paying off debt. Once you have your overall goal in mind, you need to break it down into smaller, more manageable pieces. For example, if your goal is to save $10,000 for retirement, you could break that down into saving $833 per month for the next 10 years. The second step is to create a budget. This will help you see where your money is currently going and where you can cut back in order to reach your financial goal. If saving $833 per month seems daunting, don't worry, there are plenty of ways to cut back on expenses without sacrificing your quality of life. Take a look at your monthly spending and see where you can make some adjustments. Maybe you can pack lunch a few days per week instead of buying lunch out every day. Or maybe you can cancel that gym membership that you never use and start working out at home instead. Little changes. The different types of financial goals. There are a few different types of financial goals that you may want to set for yourself. They include short-term goals, long-term goals, and retirement goals. Short-term financial goals are those that you hope to achieve within the next year or so. Some examples of short-term financial goals include saving up for a down payment on a car or house, paying off high-interest debt, and increasing your emergency savings fund. Long-term financial goals are those that you hope to achieve further down the road, usually 5 years or more in the future. Examples of long-term financial goals include saving for a child's education, paying off your mortgage, and building up your retirement nest egg. Retirement goals are, as the name suggests, those related to preparing for life after you retire from paid employment. Retirement goals could include saving enough money to cover your anticipated costs in retirement, figuring out how to generate income in retirement, and making sure you have adequate health insurance coverage. Why you might not reach your financial goals. If you're not careful, you may find yourself falling short of your financial goals. Here are a few reasons why this might happen. 1. You didn't set realistic goals. It's important to be realistic when setting financial goals. If your goal is too ambitious, you're likely to get discouraged and give up before you reach it. On the other hand, if your goal is too small, you may not see the point in achieving it. Either way, you won't reach your potential if your goals aren't realistic. 2. You didn't make a plan. Achieving financial goals requires planning and discipline. Without a plan, it's easy to get sidetracked or distracted from your goal. Make sure you know exactly what you need to do to reach your goal, and then stick to your plan. 3. You didn't stay motivated. It's normal to have ups and downs when working towards any goal, but it's important to stay motivated through the tough times. If you lose sight of why you're working towards a goal, it will be harder to keep going when things get tough. Stay focused on your long-term vision and remind yourself of your motivation regularly to help stay on track. How to stay on track with your financial goals. When it comes to setting and achieving financial goals, it's important to stay on track. This means monitoring your progress, making adjustments as needed, and keeping yourself accountable. Here are some tips to help you stay on track with your financial goals. 1. Monitor your progress. Keep track of how much money you're bringing in and where it's going out. This will help you see if you're making progress towards your goal or if you need to make some changes. 2. Make adjustments as needed. If you find that you're not on track to reach your goal, assess what might be holding you back and make some changes. Maybe you need to cut back on spending or increase your income. 3. Keep yourself accountable. Tell someone else about your goal and check in with them regularly to give them an update on your progress. Having someone to hold you accountable can be a great motivator to stay on track. 4. Celebrate your successes. As you reach milestones along the way, take a moment to celebrate your successes. This will help keep you motivated and focused on reaching your ultimate goal.